So we're going to answer a couple more questions here, but we've given you a little bit of some of the dreary news on 5 o'clock mornings, so, and paperclip wallets. So we're going to cheer everybody up with some ice cream.
I can see the whole wide world with these two eyes, and I can be whoever I wanna be, 'cause it's my life.
106. 106. Okay, so we're still going to part this one to what numbers you should be looking at. But the thoughts on the thoughts on RSP and mutual funds. I'm going to do the RSP. I'll let Matt do the mutual funds. So RSPs will likely not make sense in most scenarios. For most business owners starting out, you're going to want those liquid funds, and if you were going to save it, we have a really regimented process in how we do our tax planning. But 9 times out of 10, in the first 5 years, it's going to work out that if you're doing savings, we're going to do it within the corporate structure itself. It can change a little bit. Unfortunately, that's not a one-size-fits-all solution, but it's likely going to lean towards saving within the corporation itself, unless we're going to use the RSPs for the home buyer's plan. Unless we're going to use the RSPs to purchase your home buyer's plan, it's unlikely, not impossible, unlikely. So it's difficult for me to make that. I'll just tell you the probability on that one, that if you're doing RSP because you think that's the right one, it's probably not the right one. With I would say probably if you're not buying your first house, with probably a 90% certainty in the first 5 years of your business.
Yeah, very, very, very few of my corporate clients are doing any RSPs. And one of the main reasons why is in terms of the tax planning is CPP. When you're a business owner, you pay both sides of CPP, right? As an employee, you're only paying half of that CPP. Fraser Institute did a study. It's a financial research company basically. The rate of return as an employee you will get on that CPP benefit if you live to about age 90 is 2%, 2 to 3%. Now, if you're paying both sides, what do you think that does to the rate of return? You'll never see that money back unless you live to 100, potentially more. The business side, the business owner side of CPP is more of a tax. It's not really contributing to pension. It's actually more of a tax now to make sure that CPP benefit's still paid out for all the current pensioners and pensioners that are going to be retiring in the near future. So as a business owner, it almost never makes sense. However, if you're not doing CPP, you need to be making sure that you are saving because you got no pension plan. And your disability insurance needs to be intact because you won't get CPP disability then. So you better have disability insurance if you're not contributing to CPP. But that's really one of the main reasons why RSPs are not for business owners. They are protected from creditors, which is kind of a nice thing. But if you're going into business, start to already protect yourself from creditors. Might not have a good business plan. Might need to talk to Josh.
Yeah.
Mutual funds are fine. I mean, they're an investment vehicle. That's all they are. Mutual funds in and of themselves is not a good or bad thing. It's like saying, what's your thought on checking accounts? Well, if you're paying a $100 monthly fee for a checking account, you should probably do something different. So there are some mutual funds that are fantastic. Maurer is a great company that I don't offer, but if I ever did it myself, and they've got a balance fund that's destroyed the market for like 15 to 20 years. You could do it yourself, go directly to them and pay 0.9%. An average mutual fund at a bank is probably 1.9 to 2.2%. So you could do it yourself, and that's what most people don't understand about investments, is that there's actually 2 fees being paid. One of the classic taglines is, oh, don't worry, you don't pay me, the fund pays me, or the company pays me. Who's the fund? It's your money. It's your money. So you are paying that advisor. So the question is whether or not that advisor is actually providing the value for you. Most of the time I see people who have never talked to their advisor, they come to me with a statement, I look up the fund, and it's called a commission-based unit. So you're essentially paying a commission to an advisor who's never calling you. Imagine if your accountant did that. They never called you, they never filed your taxes, they never did anything, but you paid them $250 or $500 a year. Would you do that? No. Wealthsimple, do it yourself. Q-Trade, Quest-Trade, these are all companies that you can do for 0.5 to 1% and have all your money invested, professionally managed portfolio if you don't want an advisor. If you want an advisor, then that's where you know what fee you're paying. So if you're paying commission-based unit, let's say you have $100,000 in mutual funds. Take 1% of whatever you hold, that's how much your advisor is making, or at least the company that they work for is making generally. So they'd be making about $1,000. Ask yourself a question, would you, for that relationship and advice and service that you're provided, that person's providing you, would you pay them $1,000? Or whatever that 1% number is. If the answer is yes, great, you probably have a good advisor, or a number of different things. But if they're not, take that money away from them, invest it yourself, or find an advisor who is actually going to work with you and do a financial plan and actually do update reviews with you and be proactive in your financial situation.
What about the direct investment account, like trading stocks and those kind of things? Is that like advising that or not?
Do I?
Yeah.
Not trading stocks. I refer that out to portfolio managers. I'm not out watching the market. I'm not technically an investment manager. I'm a financial planner and advisor, and I know the financial industry. I know how to sift through a bunch of crap out there. And so I refer that off to a manager who's going to be doing that 100%. A lot of people think their mutual fund advisor is actually creating their return. He's not. The investment manager is, whoever's managing that fund is. And that's a fee that you would pay regardless. So I'm just the advisor that would help you understand where to put that money, what managers are good, what makes sense for you in terms of your tax or business or whatever strategy we need to employ. That's my role.
I'll touch on like the self-managed ones. Earlier in my career, I was much more suggestive of self-managed stock portfolios. But what I see is that they're basically conflict with your goals as an entrepreneur, because it just goes back to that 168 hours a week. So now you're thinking about, okay, I'm going to do my self-managed investment portfolio instead of doing my content that's going to give me thousands of dollars of revenue next month right away. Or I'm doing my self-managed investment portfolio instead of spending that 2 hours a night with my family. So that, although the math kind of conflicts a little bit with the goals as an entrepreneur and the restrictions on time.
To give you an idea, let's say you had $50,000. 1% would essentially be what I'd use for like a Wealthsimple, where you pay Wealthsimple, like that's all in. 1%, it's $500. $500 a year is how many hours of your time? Answer that for yourself. Is it 5 hours? Is it 10 hours? Is it 2 hours? How much is the actual like peace of mind, the financial knowledge, the advice, all of that going to factor into your situation in terms of the time that you would actually need to do to research all the questions that you could probably have answered in about 5 seconds if you had a good advisor?
So we're going to answer a couple more questions here, but we've given you a little bit of some of the dreary news on 5 o'clock mornings, so, and paperclip wallets. So we're going to cheer everybody up with some ice cream. But we'll keep answering the questions while they're coming up. So, okay. So someone said, "Do I have a written out sacrifice plan?" Do I have a written out sacrifice plan? I think I know what you mean. That was your question, right? I think I know what you mean by a sacrifice, but I don't personally have a written out sacrifice plan. I've written down the things that I'm giving up. Because, and I'll tell you why. It's because I am like maniacally focused on my calendar. So I am just focused on that calendar. So the kind of the running joke is if you want Josh to do anything, just stick it on his calendar. I will literally do whatever that calendar says the next day. So I don't really have to focus on what I'm not doing because I only have one goal, it's just to do exactly what that is.
I think what,
How do I? Yeah. The part about having that calendar, when you have a ridiculous schedule like that, the key is it's a set schedule. So the key is that it really does end at 7 o'clock. So if you're gonna work any sort of ridiculous schedule, you better be regimented about it. So at least it might not be the schedule that everyone else, but it's a schedule you can count on, right? And sometimes you're allowed to, you can plan on things that if you can be regimented in the schedule. Now you can actually plan all these different events. You only have 2 hours, but you only need 2 hours to go see the movie or go out for dinner or take the kids swimming or do whatever you're going to do. But you can actually count on it, right? So that it's going to happen. So it's just that maniacal focus on that calendar. Probably, I think it does too much.
I have an addition to the calendar too. If you have a set calendar, it's easier to predict what you're gonna do in the future. So if you know what you're gonna do in the future, you can literally plan when to take your vacation and when to spend that time with your family. And also, in that time, you're not gonna be thinking about business because you already put in your schedule what you need to do. So when you book a time off for your personal reasons, it is only for your personal reasons.
What I was getting at, and I think it has a little bit to do with what you were talking about as well, is as a family and running a business, how are you involving and making a plan either for yourself or others about like the latte factor?
Yep.
Are you going to stop yourself and make coffee from 4 to 5 days a week versus going every day? Are you going to not go out as often so that you have more money to invest in your business versus the luxuries that, again, you're not entitled to at that stage? But these are the things that you're willing to do to get what you want.
yeah, Courtney and I have frequent conversations about these things, particularly the high school billeting has been a bit of a challenge this year, but to run through where we're at and where we can be in just a couple short years through that process. Definitely involving, her in that because she needs to know she's sacrificing a lot right now. I mean, she decides the luxury, she stays at home, she cooks meals, takes care of our 4 kids, educates them on what daddy's doing with 12 hours of the day, even though they don't understand it. But I know she knows, and that's how she manages it. She sees it as her household business. So I have that luxury, but we just, we're on the same page, we're on the same team, and we've kind of figured that out. That's where we're at for right now. And when the kids are in school, we kind of reassess where things are at. I definitely got some time to owe her, for sure.
Additional for that, like, it's your young downside. I figure it's male and woman is the same.
Yeah.
We try to do it now, but as a woman entrepreneur, like, how is us gonna, like, manage our schedule and our time? Because we still have to do the family part, right?
I know,
And
sure.
man's helping now, but as in my husband and me running both business together.
Oh.
Like, he has his own business and I have my own business. What it's gonna do with our family?
I think
How
you've
I-
had this experience where I can be standing there on my phone or, I don't know, doing anything. Courtney can have a baby on her hip, wiping somebody else's bum, and then the other kid is still going to go right past me and say, Mom, right? So at the end of the day, I can't necessarily answer that for you. It's a crime. I don't talk to women entrepreneurs who have managed that because that's something I can't really for us, it was actually deciding for Courtney to sideline her business for a while. We made a decision for Courtney to sideline her real estate business for a while. That's the decision we made.
I can't speak to you obviously as a woman. Chantal might be a good reason to sit in front of you there. But I can go back to the study one of my friends did about going through interviewing successful entrepreneurs, and the answer that they used was ridiculously early before the kids were up. So that was the sacrifice, right? Because they're just asleep and they can't interrupt you. So that's why it's like you can't start later because the kids will be up then, and then that's it, right? So obviously I've never done it, but from what I've looked at, the answer is ridiculously early. Yeah. And probably more important for women in that case. So, how have you involved my family in this? Like, I have like a really defined personal goal of what I want to do. You know, I have my best life is 1 week vacation every single month. People say, will you work less out? No, I will still work 82 hours a week. I'll still do that schedule. I would just do that schedule 3 times a week instead of 4 times a week. I'll still be working 240 hours a month to everyone else's 160 hours, but I'll just do that. And that's just my personal goal because I don't shut off very well. So if I get off at 3 p.m., I'm still kind of a little bit distracted in my head. But if I have a whole week off, that's going to be a fun week. I'm going to forget I was an accountant, 1 or 2 days into it. Until someone reminds me.
I'm like the exact same way.
So that's my goal. That's a very defined family goal of where I'm going. So, if you have a large HELOC, is it worth converting to a mortgage or keep a HELOC and pay interest only? More than likely, if you're a business owner, I would be telling you to keep the HELOC because you need the flexibility. If you're an employee, I'd probably give you the exact opposite advice.
Well, in your HELOC, you're paying 4.45% interest, and your mortgage is 3%. Just gotta assess whether that cost for the inflexibility of a mortgage payment versus a HELOC is what you want to have. So I'd be the same way. Most likely we'll keep the HELOC, unless your situation was to a point where we can really plan that in and have stable income to pay the mortgage.
How do you come up with the business name? How do you come up with the business name? Do a Google search first and make sure no one else has the domain name. Like, so come up with a couple names, make it, I tend to like the ones that are a little more literal. So, if it's not in the name, the name itself, put the descriptor word after it. It's, we did not banking holdings, we did banking real estate. We want that if you just put banking enterprises, what the heck does this guy do, right? Like, we want to know. So I'm going to be a little bit more literal with that descriptor word. But do a Google search, because see who you're up against first. Because you can do a nuance search. We're going to do a nuance search before we incorporate someone to see if there's any conflict. Someone else already has that name. But do a Google search first and see if there's something close or similar on that name. Like someone came to us the other day and they wanted True North something or other. I'm like, True North, anything is taken. Like everything. Like everyone has come up with this. Like, don't call your business FX graphic design. Like everyone has FX this and that. Like, so be a little bit, you make sure it's unique, make sure it's far enough away from your competitors, and make sure you can get that domain name. In fact, I would even, spend the $20 to buy the domain name before I would even do the nuance search and do the incorporation.
Also, Matt's wife is amazing at coming up with names.
There you go.
That was my answer. That's my wife.
And we'll walk you through a process in the branding that might give you a little bit more. So there's another half of that, but I'll walk you through the process in the branding where, people look at branding first, but there's a number of steps you should do before branding in your business, which most people are, let's start with the name and logo first, and then figure out what we're going to do later. Now let's figure out who we are first, and then let's figure out what we're going to call ourselves and what that branding is going to look like. So, can you tell us about how to file taxes as an entrepreneur or self-employed? If you are filing your own taxes as an entrepreneur or self-employed, you're not an entrepreneur or you're self-employed. So I went to school for 7 years to be a rookie at it. Now I'm training my rookies, and some of them have been with me 7 years themselves, and we're still getting them there. So for me to answer it in the question, you're going to have to hire someone to be your accountant. You're going to have to hire someone to be your lawyer if you get sued. That's
You'll represent yourself in the courtroom.
Don't.
Have a fool for a client, right?
yeah.
Well, and again, $250, $500 to file taxes as a sole proprietor. What is that for your time and the potential expense of going through an audit because you messed it up, or a number of different things? It's just not even worth it. And that's expensible too. You can expense that in your business. So, like, there's just no point to filing your own taxes as an entrepreneur.
I'll take that even a step further. People go with the bookkeeping, and they say, okay, well, the common thing is one person's going to do the business, and the other person's going to do the administration and the bookkeeping. Like, do you know how easy and how cheap it is to outsource the bookkeeping? You know, you always see them starting from like $150 a month. So often we have a spouse who's full-time focused. Maybe they're doing a little more work at the home front, and they're doing, no, but I'm doing the bookkeeping. It's okay. So you're adding about $150 a month of value to the business. That's all you're doing with your 30 hours a week that you're putting in, $150. And then, you know, what I tell them to do is get both spouses hunting for new clients. That's the hardest part of your business, is bringing in new clients. How can you have that person out doing some networking? Can you get them going out and doing the initial consults? Can you go to them have, you know, calling those ideal and likely buyers, those people who can refer you time and time again? Can they build relationships with those people? That's really hard to hire someone to do. So what you really want to do in most family businesses is you want to have, if they're both actively involved in the business, have them both playing offense. Not one, you know, in the back office and one playing offense. No, have them both playing offense, because that's the hardest thing to actually go and do as an entrepreneur, is put someone in that role.
So that was actually my question, and for me, this is the first year that I'm self-employed. So even just having some basic, you know, tips on like what to keep in mind with regards to taxes, even if I don't like do the filing myself.
So what you do is go schedule a free consult with us, and I'll actually walk right through you. I'll determine, should you be incorporated, should you not be incorporated first, and then we'll determine, if you're not incorporated, this is exactly what you need to track. You need to bring this back to us in March next year.
Okay.
These are the categories, right? And it'll be different depending on the type of your business, but you know, we'll do that consult all day long. It's a free consult. You can get a copy of my favorite business book, and you can sign up at the front on that. Yes, it won't get you on the straight and narrow. So it's a lot easier than people think, and a lot of people go into it thinking, well, I got to download QuickBooks and I got to learn this. Like, no, you got to get more clients. That's what you have to do. You have to get more customers. Spend all your time doing that, and as little time doing that part as possible. It'll be different if you're a solopreneur or you're starting with a shop with 10 employees. We'll recommend something different, right?
Sure.
But we'll flush that out in the consult. Yeah. Okay, so let's move into, before we